Hello and welcome to this session. This is Professor Farhat, in which we would look at preparing a single continuous multiple step statement of comprehensive income. Comprehensive income is all of income. It's comprehensive. It includes net income, revenues, expenses, gains and losses, inserting income and losses that surpass the income statement, that are not listed on the income statement. And we talked about those, like unrealized gain on securities available for sale. That goes into comprehensive income. Pension adjustments, foreign currency, certain cash flow hedges, fair value for reporting liabilities. Those items, any gains and losses, they are listed in comprehensive income. And in this example, we are giving a trial balance and we are asked to prepare a single comprehensive statement of comprehensive income. Now you can prepare statement of comprehensive income in two different ways. You can have the income statement separately and the comprehensive income separately as two separate statements, or you can have one statement, and this is what we will do in this session. Let's go ahead and get started. Before we proceed any further, I have a public announcement about my company, farhatlectures.com.
Farhat Accounting Lectures is a supplemental educational tool that's going to help you with your CPA exam preparation as well as your accounting courses. My CPA material is aligned with your CPA review course such as Becker, Roger, Wiley, Gleam, Miles. My accounting courses are aligned with your accounting courses broken down by chapter and topics. My resources consist of lectures, multiple choice questions, true-false questions, as well as exercises. Go ahead, start your free trial today.
So the trial balance for Adam Corporation, a manufacturing company for the year ended 20x1, includes the following accounts. So we are giving a trial balance: sales revenue, cost of goods sold, selling and administrative, interest expense, and gains on debt. Now obviously this is a partial trial balance because if you add them up, they don't add up. Trial balance is supposed to be balancing, but this is a partial one. The gain on the debt securities is unrealized. So this gain is unrealized gain. Therefore, it's classified other comprehensive income. In other words, when you prepare the income statement, this does not go on the income statement itself. This is part of comprehensive income as other comprehensive income. Now, on the CPA exam, they may or may not point this out for you directly. So you have to be careful. The trial balance does not include the accrual for income taxes. Therefore, we have to book income taxes. Adam's income tax rate is 25%. And you're going to see why this is important, because taxes, the way we report taxes for the income statement and other comprehensive income, they are listed separately. And we'll see how in a moment. Let's go ahead and start to prepare the headings of the financial statement: the name of the company, the name of the statement, and the period ended December 31st, 20x1. Now this is an income statement. It's for a period of time. It's for a period of time. Notice it's this 4-year ended. Now we're going to prepare an income statement, and I hope we all know how to do this. Starting with revenues, 2.3 million, cost of goods sold, 1.4 million, gross profit, revenues minus cost of goods sold. Then we deduct operating expenses, which we have selling and administrative. We used revenues, cost of goods sold, selling and administrative. Then we come up to operating income. I'm going to call this EBIT, earnings before interest and taxes. Now we have interest expense of 40,000. Then we have income before income taxes. Now this is EBI. So this is the income before the income taxes. Let me go back and just talk briefly about EBIT. EBIT is important because EBIT tells you what the company is earning regardless of their form of financing, regardless of how much taxes they pay. So when you want to value a company, what you want to look at is look at their operating income, and if that's their operating income is earnings before interest and taxes, that's an important indicator of what? Of their ability, of the business ability. Simply put, they're operating the business and they're generating operating income. Now everyone has to pay taxes, and how each company finance themselves, it is different. Therefore, we would look at things before interest expense, before taxes, because interest expense is a finance expense, in quote, finance, and income taxes has to do in the geographical areas in which you operate. There's nothing you can do as a business about that. Therefore, we compute our income taxes. So 440,000 times 25%. Income tax, if my math is right, is 110,000. Then we deduct the taxes, we come up to net income, which is 330,000. So this is income. So basically we used up every figure on the trial balance except the 80,000. Why not the 80,000? Because the 80,000 goes under comprehensive income. So let's take a look at comprehensive income net of tax. We have gain on debt securities. Now the gain on debt securities is 80,000. How do we report other comprehensive income items? Every time you have other comprehensive income item, it has to be reported net of tax. Now I created a separate recording explaining net of tax because it's an important concept in accounting. I'm going to also show you how you do this now. So if you want to find an amount net of tax, I'm going to show you how to do it. Then I'm going to explain how you'll take this amount, whatever happens to be, times 1 minus the tax rate, happens to be 0.25, will give us 60,000, 60K. Now let me show you how we come up with this. I want to make sure you understand what 60K is. 60K. Now, if we have a gain of 80,000, we are responsible for paying 25% in taxes. That's 20,000. So 80,000 minus 20,000 equal to 60,000. Now, to just go to 60,000 automatically, take the amount times 1 minus the tax rate. You would report the gain or the loss. If it's a loss, it's a benefit. It will be a benefit because it's reducing your tax bill. It comes up to 60,000. Now, comprehensive income is you take net income plus, it happens to be a gain. If it's a loss, it's a minus. 390,000 plus 60 equal to 390,000. Now, earnings per share is 0.33, which is taken net income, dividing it by 1 million shares. And we'll talk later on about earnings per share. It's one of my favorite topics because with earnings per share, we move into my favorite ratio, the PE ratio, price earnings ratio, which is a multiple, helps you evaluate the value, the stock value or the stock price of a company. What should you do now? You want to go to Farhat Lectures, look at additional resources that's going to help you, whether you are an accounting student, a CPA candidate, CMA candidate, or any other professional certification. Invest in yourself. Good luck, study hard, and of course, stay safe.